Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is January 26th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I am not a financial advisor, so please do your own research and make your own decisions. Tesla is up $15.84. That's 10.97%. Closed at 160.27. Post-market, we are down by 77 cents. So let's look at what we have here on the chart. Yesterday, after the close, Tesla had their earnings call. And Tesla had a nice surprise in terms of earnings, 5.44% higher than what was estimated by the analysts. So a little bit of a beat on the earnings and a little bit of a miss on the revenues. This is a great example. So we have some good news and some bad news. So how is the market going to react? Nobody knows. We only know when it happens. And then our job is to take a look at what is happening and decide if this is a significant change in trend or a continuation of the current trend. That's it. That's all we have to do. That's all we have to do. So we were into a uptrend already. We started to be sure right here after the day on Friday, the 20th of January. This is where we were sure that we were starting a bull trend. So this is the bull trend that we are in. And as I mentioned yesterday, I think, so this bullish trend is very tight. The space between the two lines is very tight. This is where the stock was playing. And when a bullish channel or a bearish channel is very tight, it does not last for a long time. Stocks, especially Tesla, it likes to move. It likes to move. It's a volatile stock. It does not like to be constrained. What we have here is exactly what I was expecting eventually. I did not know when it was going to happen, but I was expecting it eventually. We are clutching a second gear. So this is the first gear. This is the first gear right here. This is the first bullish move gear. And now we are crossing above the resistance of this bullish channel. And we seem to be, I'm not sure yet, but we seem to be entering a second channel, a second gear. And this is something that we had in the past. This is something that we had in the past. This happens all the time with stocks. Let me try to show it to you a bit more clearly. So if we go back to 2020, we had this very tight channel here that was going up. And then Tesla decided, okay, this is not fast enough for me. It started to go faster. Sometimes it comes back in, and look at this here. So it started to go faster, and then it started to go super fast. But at some point, there's an overextension. The stock overextends itself. People get excited. That's fine. This is fine. I don't mind people getting excited because this is pumping the stock like crazy. And then at some point, there is a congestion zone. Things are slowing down a little bit. They are going sideways. At that point, we need to be careful and find a support below which we should sell. So that support was approximately at that point at 256. That was not the number at the time because we had a couple of splits since. But basically, the concept is that when you have a congestion zone, you find a support and a resistance. And if you are already in the stock and it continues, then you just stay in it. And if you are in the stock and it goes below support, you sell. That's it. And then you let it play out a little bit. It's going to tell you what it is going to do. So it's making a lower high. We had a high right here. It's making a lower high. You can do this downward resistance and then you say, okay, I will buy back when we break this. And then you wait. You wait a month or two. And then guess what? It breaks it. So anyway, so basically, this is how I do things. It's not a perfect strategy. Nothing is perfect. It's working pretty well. And I don't suffer a stock that is in a downtrend. I don't suffer that. I never suffer that. And that in itself is saving me a lot of money. The paper money that I get, I keep. Instead of watching my account go down for months without knowing when it's going to stop. This is not something that people that do technical analysis do. People that suffer a downtrend for years are people that are fundamentally oriented, that don't understand trends. They don't understand trends. They only see the stock market movement as numbers on a thermometer. Sometimes it's high, sometimes it's low. It's worth this. I think it's worth this, but it's at this price. I'm going to buy. And then it can go even lower, even lower, even lower. And they are just like, it's really worth this. Well, okay, you might think it's worth this right now, but if you don't find people to prop up the stock, then it's not going to work. So this is why I do technical analysis, because trends are important, and looking at the thermometer won't show you any trends. Anyway, so if I come back to the daily chart, I just ranted a whole lot. So we are back inside the downward trend. So that's the big news. That's the big technical news of the day. This is the big downward channel, very important downward channel that started November 2021. We have been coming down like this, and now we are back into it. So officially, this is green. This is green. This is now support. Yes, it's only one candle. Sometimes it's nice to wait for two candles, but this is green. We are back into this downward channel. We had been going down faster than this downward channel. So this is a news in itself. We are coming back into this. Now let's see how far we are going to go into this channel. We can just sit here and watch. Let me look at the 1 hour chart. So on the 1 hour chart, yes, we had a nice gap up right here. 3 hours down, but then we started going back up again, and we broke this horizontal resistance that we had at 160.0. So this is a resistance that was used right here, December 14th. December 14th. So we are back to where we were on December 14th. And if we look at our indicators, when we have a big gap like this, things are pretty good in terms of indicator. We have stochastic at 95. We have RSI that is overbought. This is not something I noticed last time, but we were overbought here January 23rd, and we are overbought also today. So very nice, powerful moves. This is an indication that the move is really important. It does not mean that we need to sell, because we can stay overbought for an extended period of time. It just needs that on the 1 hour chart, we have the pedal to the metal. If we come back to the daily chart, so we have stochastic at 98, extremely strong. RSI climbing higher, 65. We have MACD climbing pretty steeply. And look at this, guys. Look at this. We have a DMI cross. We have a DMI cross. And when we have a DMI cross, this usually indicates that we should be going higher for a longer term, because it takes a lot to convince DMI to change its tune. So this is the first cross that we get with the first day of the cross, but let's just wait for a couple of days to see that DMI maintains itself bullish, but this is great news in itself. We could be at the beginning of a longer bull trend for Tesla. So fantastic. Thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.